Today, we're diving deep, not just into a stock, but into a really fascinating turnaround story. What if I told you there's this huge industrial name, synonymous with power, with precision, and it might be on the edge of this, well, explosive comeback?
Yeah.
We're looking at a specific prediction that's got people talking. Analysts think Rolls-Royce's profits, they could maybe quadruple in the next few years.
Quadruple, yeah. That's a huge forecast.
It really is. So what's behind this massive confidence in a company that powers jets, ships, you name it? And maybe more interestingly, what can we learn from one investor's bold move? Someone who recently bought in, really putting their money where your mouth is, believing in a company that honestly just a few years back looked very different.
Well, it's that conviction that's so compelling, isn't it? Because buying shares, especially in a company like Rolls-Royce, it's not just clicking a button. You're buying into this incredibly complex system. Think about it. Global supply chains, contracts lasting decades, huge economic forces at play.
Right.
It's not like betting on a quick tech startup win. This is about understanding, well, fundamental shifts in a really critical, mature industry.
Okay, so let's talk about the individual then, the one who made this move. This person recently bought 500 shares in Rolls-Royce Holdings.
500 shares.
Now, maybe 500 doesn't sound like a massive number in the grand scheme of the market, but for one person, that's a calculated decision, a pretty substantial commitment. We're talking, what, thousands of pounds depending on the price, all into one company.
Yeah, that's not pocket change. That's a real stake.
Exactly. And it wasn't just a guess. It came from apparently a lot of research, a real belief in this turnaround strategy they've got. Because let's face it, the pandemic absolutely hammered aviation. And Rolls-Royce's revenues, well, they took a massive hit.
Huge hit, yeah.
But now, air travel's bouncing back globally. And they've got new leadership, making decisive moves, the whole picture just shifting rapidly. So this 500 share buy, it feels like a statement, a statement of confidence. A calculated risk, definitely, but based on seeing real improvements that maybe the market hasn't fully caught on to yet.
And what's really fascinating is that single investor's confidence, it actually mirrors what a lot of analysts are saying too. It's not happening in a vacuum. When they talk about profits quadrupling, I mean, they're not just, pulling numbers out of thin air.
Right. What are they seeing?
They're likely looking at the operating leverage. So as planes fly more, those engine hours generate revenue, and a lot of their fixed costs are already covered. So profits can ramp up fast. Plus, you've got high-margin service contracts really kicking in now. And they've been working hard on cutting debt, which frees up a lot of cash.
Okay.
It's like this powerful combination, a compounding effect as the business scales back up. And that leads straight to a much healthier bottom line. This forecast, this potential, it really sets the stage for our whole deep dive today.
Okay, so let's unpack that. Let's peel back the layers. What exactly is fueling this pretty dramatic shift?
Well, a massive part, obviously, is the aviation recovery we mentioned. Airlines flying more hours. That's absolutely critical because Rolls-Royce gets paid for those engine hours, right?
That's the core model for a lot of their income, yeah. The power by the hour.
And beyond just flying more, we're seeing huge new aircraft orders being placed. That signals a steady income stream, potentially for years, even decades to come.
Long-term visibility.
Yeah.
Very attractive.
But it's not just like waiting for the tide to lift them. Under the new CEO, they've been incredibly active. They've cut costs aggressively, streamlined things, sharpened the focus on the really profitable parts of the business.
Getting leaner?
Yeah. Exactly. They're even selling off bits that aren't core to their main mission.
Yeah.
And using that cash, plus operational cash flow, to significantly pay down debt.
Which strengthens the balance sheet enormously. Makes them more resilient.
The whole thing feels like a genuine transformation in progress. Not just recovery, but rebuilding stronger. And if you connect that to the bigger picture, you start to see why this story is grabbing attention. First off, Rolls-Royce. They dominate the market for engines on wide-body aircraft. Think long-haul jets.
Right. Big planes.
Big planes, big engines. And the barriers to entry in that market, they are incredibly high. You don't just decide to start building these things tomorrow. It takes decades of expertise, massive investment.
So less competition worries.
Relatively speaking, yes, it's a tough market to crack. But what's maybe even more interesting for investors now is how their business model works. It's shifted. The real money increasingly isn't just the initial engine sale, it's the long-term service contracts.
The maintenance and support over the engine's life.
Exactly. Decades of predictable, recurring revenue, that kind of stability, it's gold dust for investors looking for steady growth, especially in today's market.
That predictability does sound appealing.
And then there's innovation. Don't forget that. Rolls-Royce isn't just sitting still. They're pouring money into sustainable aviation fuels, hydrogen tech, even small modular nuclear reactors, SMRs, for clean energy.
So future-proofing the business too.
Absolutely. So investing now, you're getting exposure not just to the aviation comeback, but potentially to these huge future energy solutions as well. You put it all together, dominant market position, that strong recurring revenue, the innovation pipeline, and what many analysts argue is still an undervalued share price. Well, you can see why it's a compelling story.
That recurring revenue point is really strong, but are there risks hidden in there? You mentioned long-term contracts. Do those have downsides, especially for a company that's just coming out of a tough patch? What's the other side of the coin for people who might still be a bit cautious about this rosy outlook?
That's a really important question. Yes, recurring revenue is great, but long-term means long-term exposure. They're locked into agreements for decades sometimes. So big shifts in, say, fuel prices, unexpected maintenance cost increases, even major geopolitical events, those could absolutely squeeze their profits down the line if their contracts didn't anticipate them correctly.
Okay.
Yeah.
So assumptions made years ago might not hold up.
Precisely. And look, the turnaround plan looks good on paper, but execution is absolutely everything. Any slip-ups in hitting those cost-saving targets or maybe a delay launching a new engine program, that could easily shake investor confidence. It's definitely a high-stakes situation, no guarantees.
Okay, so it's not a slam dunk, even with the positive signs. Ultimately, though, these kinds of stories, like Rolls-Royce's potential comeback, they're not just about big corporations, are they? They really bring it back to you, the listener, and the active role you can play in your own financial future. It's a powerful reminder that investing isn't, or shouldn't be, passive. It's about, well, doing the homework, like that investor did, forming your own opinions, and making choices that actually line up with your own goals, your own comfort level with risk. This deep dive hopefully gets you thinking about what you want your money to achieve and how you might actively shape that path.
And that's such a critical point, because while a story like this Rolls-Royce one is fascinating, maybe even inspiring enough to make you look deeper into a company,
Right.
you should never invest just because someone else did, or because you heard us talking about it.
Right. Definitely not.
The most successful investors, they build their own conviction. And that comes from research, digging into the numbers, understanding the business, and being really honest about your own risk tolerance. And you absolutely have to remember, every investment carries risk. Share prices go up, but they also go down. You could lose money.
Yep.
Important reminder. Rolls-Royce, for all its strength, is still tied to the global economy, to the ups and downs of air travel. Another unexpected downturn, a major technical issue with an engine that could hurt the share price. That is precisely why diversification is so vital. You've heard it before, but don't put all your eggs in one basket. Spread your investments, different companies, different sectors. It helps cushion the blows.
Mitigates the risk of one company having a bad time.
Exactly. Understanding these risks isn't about being negative, it's just smart. It's realistic. You need to be prepared for volatility and, crucially, only invest money you can genuinely afford to lose. It's about balancing that optimism for growth with a healthy dose of realism.
Well said. But let's also touch on the rewards beyond just, the share price going up. Yes, if Rolls-Royce delivers on this turnaround, your shares could become much more valuable. Great returns. Potentially much better than just leaving cash in a savings account. And maybe, as they get financially healthier, those dividends could come back too. That nice stream of passive income.
Always attractive. Dividends.
But there's more, isn't there? There's that satisfaction you get from backing a company you actually believe in, an industrial giant like this, seeing it succeed, and just engaging with these stories, doing the research. It sharpens your understanding of business, of the economy. That builds real financial confidence over time.
It really does.
The journey itself, the learning, the analysis, making informed choices, understanding these complex turnarounds, that process alone is a reward. It's personal growth, separate from the financial outcome almost.
I completely agree. The Rolls-Royce story is, look, it's a powerful case study, a reminder of the opportunities that are out there in the market, but also a reminder of the discipline needed to approach them wisely. So keep learning. Don't stop here. Read the company's reports. Compare what different analysts are saying. Really deepen your understanding of these big shifts happening in industries you're interested in.
Knowledge is power, as they say.
It really is. Knowledge is your absolute best defense against risk and against letting fear drive your decisions. You want to act with conviction based on your research, not just react emotionally to market noise. And look, especially if you're considering significant investments, think about talking to a qualified financial advisor. Get professional input tailored to your situation.
Good advice.
Investing can be incredibly rewarding, truly life-changing sometimes, but it demands that plan, that understanding of the road ahead. So the Rolls-Royce story is one chapter. What strategic business story, what company transformation might you deep dive into next to help shape your own future?